just be careful. Here we are right now. We got the VXN. What is a VXN? It's a fear indicator, Nasdaq 100 and Nasdaq comp, but really when this breaks higher, stocks go lower. When this reverses, it just dropped huge. You can see that we're down, and you can see here that we're real strong here. When this is strong, that means that there's fear in the market. That means that people are selling. And stop market orders are getting taken out, or margin requirements may be getting met. And that's part of what this is. And it hasn't had a breakout in quite a while. I can tell you now, though, when you take a look at the full intraday of it, what it means is too many people were complacent. And it's a measure of how the markets have been all day, because this thing has been breaking out, pulls back to a half bar breakout right here and made higher highs, and equities have continued to sell. We're going into the closing bell right now. We're down 284 points, 51 on the Nasdaq 100, 66 on the Nasdaq comp, S&P 500 30.98, not to mention the large cap S&P 100 down 13.26 pennies. That overbought markets must correct. Bull rallies are wonderful to trade. However, we all need to understand that there is a time to exit. There is a time to exit. I'm going to show the VIX now. And the VIX, that's part of this S&P 500 that's taken a big haircut. And like I said over the weekend in the stockmarketfunding.com analysis to MMTs, was that we would go down. And through our Saturday and Sunday and even Monday training sessions that we elected to go and participate with, is that when we were doing our analysis together, is that June would start down, and that we have not finished the bottom as of today, when the original trends had started in the early part of May and the end of April on the stockmarketfunding.com website, training the MMTs how to spot top reversals in markets, in indexes. Index tops is what we call them, and equity tops and all kinds of things. And we went through our training analysis. What I would like to show you is that S&P, when this was breaking out all day, see these higher highs all day? S&P was selling off, and stocks in the S&P are dropping in value. After the closing bell, what I will do is go through the sector component chain, and we will see where that broad-based selling was as a secondary leg of selling that is still a hangover from May. It's still a hangover in May. And when we're breaking higher here, you're getting net long bear funds. Bear ETFs will be breaking out because they're oversold and have been for a number of months. So the overbought side was due for a bull rally reversal. And this is what it looks like on these kinds of days using the VIX and the VXN and the fear indicator. How do I use it correctly on an intraday level? Because if you remember one thing, if you're going to be breaking out and making higher highs than this all day, that means that stocks are going to fail at support all day and roll down, and you would be making short sells. And you will learn how to use bear and bull ETFs along with fear indicators, so that once again you'll have a very good directional foundation.